Hey, we done did it. We are off to the races. S&P 5000, SPX 5000, S&P 500. We are good to go. Holy camoli. Yeah, just keeps going up. Good luck shorting, my friends. Good luck shorting. Octa feeling silly. Yeah, you know what? I'm not really too worried about a whole lot right now. I do like Octa actually. It's funny story. We'll save that one to the end. But she's looking, not gonna lie, she's kind of looking she's looking a little snowflakey to me. Look at the handsome mug. You guys are hilarious. Shalom. Shalom here if you guys are too funny. Uh Shalom. I know. Baby Paper was pissed, man. That kid is super sharp though. I don't understand. Like you wouldn't believe it's not his fault. Number one, he was born into a Niners family. It's kind of where we live, right? Um, but yeah, he was definitely bummed. And I swear, like the second that they lost, he was like shocked, and then he started crying pretty bad. But how do I can't beat the Swifties? Yeah, how do I could like do I post a picture? There's something about a crying baby. I'm like, I probably don't want to post that. Probably not the best thing. I'm getting flooded on these DMs about this penny stock that I don't know anything about. So I don't know. RNLX, who knows? IWM, by the way, huge move this morning. And man, what's that book? Man, that was just like I've been waiting for this move to really start. I think everybody's just finally starting to look at that ticker. 203.28 was a huge, yeah. Thanks, Futbucker. Huge level. So a big trim. Still very heavy, but a trim, like a safety trim. Over 205, we can get cranking pretty heavily though on that one, no doubt. I have a couple runners on, nothing crazy. Today's Monday, right? We have a big day tomorrow, so CPI next week. That's a huge one. We will go through the calendar. So, and really quick, by the way, is it RN? Yeah, that's correct. If anybody's new to the stream, welcome. Number one, what we do here is we actually just kind of like prep for the week, right? I trade for a living. That is what I do. That is my source of income. If I don't make money, then I don't make money in the market. So ideally, we want to find some trades today for the weekly focus trades that that we can kind of bank on together. Really, I'll show you guys what I'm looking at. Some of the stuff that I have on the calendar, really like what's important from last week. What are things that we need to watch out for this week moving forward? We're coming off a huge week of earnings too as well. So that's a big one to note. I think that's starting to die down. But what we're seeing for sure is we're seeing kind of like a lot of those small cap kind of names. And I'm going to show you guys a chart this week that you may not, of an ETF that you may not be familiar with, but I absolutely want you to know and learn to love. It's called the IGV, but that is the software sector as a whole, and I think it's going to tell a pretty clean story just across the board. And we will look at some post-earnings trades, pre-earnings trades, and some run-ups as well. So that said, let's get to the decks here. I'm going to pull this chat down. If you guys have any tickers, by the way, go ahead and GLD, GDX divergence. Yes, very interesting. We will absolutely look at that. So we closed over, I think we did close last week just around 500 on SPY, 5,000 on SPX, S&P 5,000. That's a huge mental mark. Can it go higher? Clearly it can. So it'll probably blow off, just a little bit higher. The thing is, like, so many people are talking about this really steep channel, upside channel. And a lot of people are talking like possibly overbought, this, that, and the other. I'm just going to say this one time. When markets look like this, here's the thing. You can try to short it or whatever, or if you're concerned about something running too fast, even exiting, we're probably going to dip at some point in time. But the thing is, like, when we dip, where is that dip going to stop? That might stop higher than where we are today. So the moral of the story is just wait till the trend to break, and then you can trade it in the short term. But for now, it's just very clear that we're going to the upside, right? We have some major catalysts this week on deck. Definitely want to be aware of that. And we have some serious revisions to the data as well. So is that Jesse? What's up, Jesse? Oh man, did I send you a link? If I didn't, I will. Let me just get you a link real quick if I don't have it. If I didn't get it to you. If you're around, if you're, feel free to hop in. You're always welcome. But anyways, let's get into this. All right, so just, basic recaps, not a whole lot. There was some major revisions as a side note. So CPI was revised lower by 1/10 per Fed Governor Waller actually called that out. Sorry for my punctuation errors there. Called that out on one of his speeches. We had a ton of speeches last week. We have a ton of speeches this week as well. And then if you go back to what the market is pricing in, and remember, this market is all about rates right now, not necessarily like interest, like not necessarily inflation, but like the current interest rate, right? And what the bond auctions are looking like, all that kind of stuff, right? So right now, per the CME group, right? So projections, there's no move in March expected, no cut in March, obviously. Then they do forecast a cut in May, followed by 4 more rate cuts by the end of the year, right? So that's what's currently priced into the market. If anything changes outside of that, let's say all of a sudden we're not expecting 4 more rate cuts by the end of the year, then the market will start to go down, right? So if we get some data points that don't support that view is what's currently priced into the market right now. Also, National Association of Business Economics, Rising Sharon poll, and they're basically saying that the Fed is overall too restrictive. So moral of the story, right now, the market is pricing in more rate hikes or rate cuts, which is why we're seeing IWM move the way we're seeing it move today, right? And if that story continues, that move will just continue on, right? And no, it's not overbought or anything like that on the larger time frames. I would not worry about it. We're actually not even breaking like I think it was last week or 2 weeks ago highs. We're not even over that yet. So like, and it's not going to be until we're over 206 that we're like, oh, okay, we are now in full blown breakout mode. And then we're looking at 225s plus. Right now we're just starting to warm up. So yeah, we might be heavy green. This is why it's a safety trim for me. On that trim, I'm still largely positioned in a couple different options. Nothing short dated. Mind you, I keep getting these DMs. Well, I have these February contracts. Is that, guys, I'm not going to reply to that stuff. You do you, right? If you want to know what I'm in, then you have to join the servers, right? We will be starting class. So we do trainings every Thursday after market close. Every Thursday, we go through what we call the School of Gains, and that's where we teach you to do what we do in terms of trading. That's going to start again on March 1st. That means that enrollment time is now. You will not be able to sign up for paper gains after the 29th of February. Yes, it's 29th. It's a leap year. Side note. So go to papergains.com and sign up if you want to join and see what we're all about. Anyways, let's go ahead and move on. I didn't have a whole lot of other headlines other than what we can go through on earnings. So here's the recap. So there were revisions as an aside. So this is Friday. So those were those revisions, revising down to 0.3% month over month for CPI core and 0.2% headline for CPI as well. We're going to get some revisions later this week too. It looks like they're coming in on Wednesday. So Wednesday is actually not set to be a big, it's not actually set up to be a big day-to-day, but there is some revisions for PPI coming. So I would say that is an aside. Today we got ISM services, PMI. So again, coming in, that's last week's. So one thing I did want to know. So this was the total household debt Q4. So this was one data point that came in last week that was like, okay, what are the bears really hanging on to? I got a couple DMs about like maybe like government printing so much and they're having to spend an insane amount of interest to pay off the debt that they're raising. That's the government. That is true. That's not the consumer, right? So the consumer is incredibly strong right now. Crazy to think. And the last consumer reading in terms of debt was actually really low. I don't have it here, but that came in last week, and it basically showed that they were spending mostly with cash and not running up more credit. So it's actually looking pretty good on the consumer front. I did list out a couple bond auctions just again because that's what's been moving markets recently. So when we do see these note auctions, so there's notes and there's bonds. The only difference really is just the term, like length of time that the note is good for. So if it's less than 5 years, it's called a note. Over 5 years, it's called a bond. That's why 10-year. Less than 10 years is called a note. So 10-year note. 30-year bond, 3-year note. So when we look at these, you're going to have like the previous rate listed in your calendars. When they come out, if it's higher, then that means that there's more interest. So if there's more interest, am I saying this right? Less interest. So less people are buying, right? So they're not building as much debt. They had to raise the rates a little bit just to get more buyers interested in actually buying the notes or the bonds. 10-year notes, slightly higher, nothing major change from this one, but it was, I guess, notable. Apparently, it was like the largest auction that we've had on record. Jobless claims we did get in. Those did come in slightly lower. Again, anything around 200 is perfectly fine. And then we talked about the revision. So it was a very light week in terms of data points last week, but this week we actually get some serious ones. Today we did get consumer inflation. Let me see what that came in at today. So this week, consumer inflation expectations was 3% forecast, and it came in exactly at 3%, which was also the same as prior. So nothing major to note. A couple bill auctions, super small. And it's not until we get to tomorrow. So what I'm looking at in the charts right now is I'm actually looking at the market doing what it likes to do. And it has done the last couple weeks, is that it's kind of front running what they're expecting to be a good number. So CPI is tomorrow. That is the actual inflation reading. We're going to get two numbers. One is called core, and one we call the headline number. Excuse me. Core does not include things like food, gas, the stuff that we actually spend most of our money on. And the other one is headline, and that includes basically everything. So, it is what it is. I don't know why they separate it. Well, I do know they separate it because it's more volatile, obviously. But that aside, going backwards a couple weeks, we did note that, hey, look, Powell was starting to talk about some things that are taken out of the headline to create the core inflation rate, which is totally abnormal. And so he's starting to pay attention to this stuff. And what we're talking about is the stuff that really gives the consumer like its buy power, right? Like, so the story lately had been, inflation has been outpacing the rate of earnings, hourly earnings increases, but not lately, right? So if we go backwards one slide, if the rate of core inflation is at like 3% month over month, 0.3%, I got to grab this annual. Inflation rate, the last inflation rate was 3.4%. If our wage increases, which we got last 2 weeks ago, is like 4% now, all of a sudden the wage increases are actually outpacing the rate of inflation, and that's good for even better for the consumer, meaning that the consumer can start to pay down some of the debt. So it's a long road to trudge. We'll see. We will see. So Tuesday's the biggest day of the week by far. On one of my calendars, I have like this. So I'll just show it to you really quick. On this one calendar, I think it's CPI. It's showing me core PPI for December on Wednesday. That would be like a revision, because Friday we actually get the real PPI reading, but that is for January. So this looks like a revision coming on Wednesday to last month's PPI. So keep that on watch. That's an aside. We just have a couple of Fed speeches. We get retail sales on Thursday. So that's going to affect more like your Nike, Starbucks, those kind of things. And then Friday, we have the actual PPI number. We also get consumer sentiment. So funny enough, like if you're really into macro stuff, you probably know that PPI is actually more important than CPI. CPI is very much a lagging indicator. So it just tells us what has already happened in the past, right? Like CPI should not be a surprise if you've been following most of the data points up to that point. But PPI is the producer price index or producer inflation, and that should be a bit more of a leading indicator, which would tell most people, like, the way they read that is like, okay, are the producers going to roll that down to consumers? I.e., will consumer inflation increase if producer inflation is increasing? If producer inflation is flat or negative, then you would assume, well, then the market assumes sometimes that then consumer prices are going to stay flat or even maybe drop down a little bit. So that's why PPI is technically more important than CPI, because it's a little bit more of a leading indicator. I will say this, that the last couple times we did get that number, the market shockingly understood that and actually read right into it. So I wouldn't be surprised if Friday's PPI number is actually a bigger market moving event than Tuesday's CPI, which is typically a large market moving event. And today, what I'm seeing right now is just kind of some front running into the CPI print. So I'd be very cautious about swing trading into tomorrow morning's actual inflation reading. Hopefully that helps you guys. Cool. You said I'd trim. Oh, here. So that is something in the servers. I'll update it if it gets there. I don't think I didn't get there yet. It's real close. Day's not over, man. Anyways, so I'm going to move forward one step. So earnings review. So really quick, every week I also look at some of the earnings stuff. I track the Dow 30, so top 30 components of the market. So 30 equities. We've actually got 24 so far. Nobody's really missed. I thought American Express missed. They didn't. The only one to meet was Honeywell. So that's wild, right? So this is turning out to be a really good earnings quarter. And if you're wondering why is the market still going higher, well, look, the consumer is stronger stronger than a lot of people thought it would be. We're talking like soft landing kind of stuff. And the other piece was earnings. Like, can earnings continue to push us higher? Look at this. I mean, you tell me, right? This is the results. This is just raw data. I mean, yeah, the earnings have been really good. So can the market continue to grind higher? You bet your ass it can, right? And so no, just because we're at a psychological level, just because there's like some kind of tippy top, whatever pointy thing, I'm not really worried about it, right? I will trade a short trade if it shows itself to me, but until then, there are a lot of discounts out there to be had. And I think very specifically in that RTY/IWM kind of subsect, and maybe like more mid cap, right? So if you're out there in the market today, you're probably noticing a bit of a divergence intraday, especially for things like just like Apple cannot get out of its own way, right? So like, okay, Apple can take a break. Microsoft has been doing really well, but it's still stalling right around 420, right? Google is not horrible, but it's stalling right around 150, right? Amazon had a big move, but now it's pulling back a little bit. It's still good, but they're not breaking out and they're not at the lows like some of these other ones. Tesla is just its own kind of thing. Tesla, I will go over Tesla's chart today. And I'm gonna go out on a limb today and say I think Tesla is ready to roll from here on. So yeah, I'm buying more Tesla today, and whatever dip I get from here moving forward. So That's equity, not options. Options are different. Options, you have to be in a sustained move to the upside. And holy crap, we have this other trade on Sunrun, and that thing has just been boomtown. Okay, wild. Anyways, so moving on, let's go ahead and get into some quick earnings stuff. And then we'll hit my favorite segment, and then we'll take a look at some charts for you guys. So today after the close, I do want to point out there's a big one, right? So Arista Networks, if you don't know Arista, I mean, Arista is going to be huge, right? Arista is down today. That's probably looking like a little bit of profit taking coming into the print. If you look at Arista's chart, here's Arista's chart, just really quick. On a daily perspective. This is just a beautiful chart. Arista owns the space and like gigabit networking, things like that. Whatever you think of your super micro, boxes in a data center. So you think of your NVIDIA, those NVIDIA chips go into your super micro boxes. Those super micro boxes are connected to Arista switches. That's how it works, right? Yeah, if you didn't know that, now you do. You're welcome. That said, like it's just a key component of the data stack in general. We do have tomorrow before the open a couple high flyers. So two things to note. Number one, we have Shopify. There's a pairs trade on Shopify against Trade Desk and probably a little known ticker called Wix, WIX, which I do own. Number two is Datadog. So Datadog will move your entire software sector as a whole. Fortinet kicked off InfoSec earnings. We took a CrowdStrike trade off of Fortinet as a catalyst. Datadog really kicks the rest of the entire cohort off, right? So expect to see Snowflake move off of Datadog earnings. I have no idea if Datadog's going to be good, bad, or indifferent. A lot of people are super bulled up on Datadog. They'll probably do well this quarter. I don't have no idea if the stock's going to go up or down. I'm completely indifferent to that kind of stuff, when it comes to Datadog specifically, but it is at a pretty key level. I have a couple picks when it comes to SaaS and that specific sector, and they have to be very, very unique. Like they cannot be things that are easily replicated or where there's like a huge competitive like moat around them. Snowflake is my baby there, right? You guys know that. Number one stock for the year, right? We're doing very, very well. Datadog, yeah, it's had a huge move off its bottom, but at the same time, it's not like the most special sauce type of company, but it is key company. Let's just say that, right? It is key. They do really well. They are the best at what they do in that space. I'll give them that. After the close, a couple things. Robinhood. So if you've been super bullish on Coinbase, which is Thursday after the close, Robinhood honestly is my bet in that space. If you like crypto and all that kind of stuff, Robinhood does not get the love. I am bullish Robinhood. We do have a position in Robinhood for my fund, and we've sent it in our groups. It was about $8, right? So we're up pretty significantly anyways. I'm not touching it. So there's that. Airbnb has been pretty choppy lately, but she is a big mover in terms of earnings. So just be aware. She does like to move pretty massively. Looks like she's got like a $7 update today. So holy crap. Lyft also does move, does tend to move sometimes on earnings. So we'll see. We got Sony. Did you guys know that the Nikkei, Japan's index, has been just completely destroying what is the Sony ticker? Completely destroying the S&P 500. Yeah, it actually has. And Sony kind of looks like, look at that. Here's the Sony chart. She looks like she's ready to roll. Ooh, she really does. That's a pretty looking chart. But it's earnings. So can't really read charts off earnings. Anyways, Man, we got a ton on deck. So if anybody out there is in the gold trade with me, it looks great today. Dollar, remember, dollar is cracking 104. 104 on DXY is crucial. If it breaks down below 104, we are back alive, baby. But I will say this, Barrick Gold can destroy that trade all on its own, right? I've seen it happen before. That's Wednesday before the open. So for now, gold, it looks good today. We'll see what it looks like tomorrow. And holy crap, if you were trying to short the market just a couple minutes ago, good luck to you because we are doing it again. We are still go. Man, what a ripper. Twilio, another cloud native old favorite. These guys do the text push notification things. I think that's an interesting one for sure. Oxy, I'm not really into that one. Fastly, ooh, Fastly could be a big trade. So, a big mover. I'll just say this is the sleeper of all sleepers right here. If you don't know FLSY, FLFSLY, the ticker, Fastly. Holy camole. She's cracking levels now. Oh my goodness. She's cracking levels now. Yes, this was $100. No, I don't know that this was completely overvalued at $100. This is what's called a content delivery network. These guys empower your Twitters, your Robinhoods, your Ubers. Think of content delivery. What is that? TikTok, Snapchat, content delivery. It's basically the edge network, if you will. God, yeah, it's probably way deep. But it's a sleeper. It's a sleeper and a half. HubSpot, marketing company. Upwork, we know. QF, yeah, I'm cool. Let me see. A lot of gaming stuff going on this week. So, Penn, we got MGM coming in earlier. I saw MGM a little bit earlier. But so I will say DraftKings. I actually had a short on DraftKings teed up for a watch. Just because the Super Bowl stuff. DraftKings is your main pure play other than FanDuel, which is a like you can trade FanDuel. I forgot the ticker. It's a pink sheet or it's OTC. But anyways, it's typically a sell the news kind of event on DraftKings. But man, these guys have been making some serious waves. So I don't have a hard trigger here. And then with earnings coming up this week, I'm probably just going to skip that trade altogether. DoorDash, super interesting. Like I said, Trade Desk will move off Shopify. Toast, no, not touching that. Or Open Door, just not my deal. But yeah, overall, geez, there is a ton of stuff out there. Trimble, I haven't looked at Trimble in a long time. TRMB, this is actually a huge company. Side note. Ooh, really good. Price action. Really good price action. Ooh. I'll have to do something on that later. I really like that. Trimble doesn't give you a lot of good entries usually. This is not a small company, actually. Look at that weekly view. 13.5 billion. It's kind of in a sweet spot. Navigation. Anyways, that is a really interesting setup. Really interesting. Okay. It's not liquid for options. That said, I think we are good. I see your comments and all that stuff. Before we get to that, though, it is my favorite. Oh, did I forget about Roku? How can you forget about Roku? Okay, so your big movers, if you're looking for earnings trades, if you're the YOLO type, I will tell you Arista, likely upside. I'm not going to send this stuff. Arista, Fastly, Datadog, Roku. I'm not going to go. I only give you one directional here. Roku, Datadog, Fastly. Fastly may not move off Akamai because I don't think that the market really understands that these two companies do this exact same thing. Akamai and Fastly are direct competitors. So if Akamai dumps and Fastly dumps in tandem, I would actually use that as a buying opportunity. Yeah. Other than that, I mean, big mover Twilio, big mover Airbnb, big mover Datadog, not a big mover Robinhood, not really. Big mover Coinbase, Roku, DoorDash, I would actually skip. And Fastly is going to be a big mover for sure. So, anyways, Zillow, nope. That's it. Instacart does a who knows on Instacart. Maple Bear. I don't think there's enough data out there for them. But anyways, that's it for now. All right, let's get on to the rest. Here we go. All right, guys. So this is where we go through the tarot readings for the week. So we get one card for the theme, right? And then we have another card for each day of the week. Today we have the 6 of Wands for the theme card, 3 of Cups. That's today. Looks good. Then we have a Moon card. Looks like 2 dogs, so maybe flat. Somebody's fighting. The Ace of Wands. I don't remember what it is. The Hermit. I remember the Hermit is totally flat. Oh, God. This 9 of Swords thing looks horrible. What happens on Friday? Oh, Friday's PPI. Oh, God. That's a really ugly looking card. All right. So she's saying, so Miss Cleo thinks, all right, we're choppy essentially. Early impulse for a little bit more. Who knows? And then stall. And then this looks like really like big. I don't know. That looks like fullback. All right. So theme card, 6 of Wands. The Hermit last week told us to stay away. So whatever. We knew how to trade that, by the way, in our groups. As for this card, it tells us just that there will be something to celebrate, and we may get a little cocky, only to get knocked off our horse at some point. Fair, right? This card usually rallies, then finishes flat, so I wouldn't chase here. 6 mid-cycle. This could be more of a pause than a break. So let's see what the daily cards have to say. So Monday is today. Theme of celebration once again. Yay! 2 Fed speakers, blah, blah, blah. So Miss Cleo is good at predicting the setup. I'm just going to say that. She's good at predicting the setup. She's not good at predicting direction. So we're not going to listen to her when she says what direction it's going to happen. Initial bounce runs out of steam, then party gets going. Yeah, see, initial bounce. Was there even a stall? That's what I'm talking about. I mean, a little bit. Yeah. Look at that. So initial bounce. Look at this. So provide initial bounce that runs out of steam once the party gets going. She said it's low energy though. Initial bounce, run out of steam. She missed this whole thing. So that's all. She was wrong there. So careful on that stuff. The setup, though, she was good. So Tuesday is the moon. This card, two meanings. So first is what you'd expect. Moon, big rally. Second is more nuanced. So it says an illusion will be revealed. And usually this means negative price correction. So I'm going to listen to illusion. So that could be like, I would read that as like a reversal day. So maybe a day that opens red and closes green, or a day that opens green and closes red. I think that's what I would read that. I can't say which moon. Weekend, so negative day here. Wouldn't surprise me. I said that the cards is historically bullish. We're stuck waiting to see how the trend develops. Yeah, so maybe cautious Tuesday, possibly reverse the open. Wednesday, Ace of Wands usually brings new starts. This is negative more often than not. So that kind of fits the narrative emerging from the Hermit into the moon. This card will be fiery and impulsive. What happens on Wednesday? Do we have something Wednesday? No, Tuesday is CPI. Wednesday is nothing except for possible PPI revisions. Fire impulses expect big moves, but big swings. Wait for a trend, ride it, hold on for dear life. Okay, so Thursday is the actual hermit. He's appearing here again. Thursday, that makes sense because there's nothing happening in terms of economic data on Thursday. It's all about Friday's PPI at that point. So yeah, Thursday, easy day to take off for sure. Friday, 8 of Swords. Second Friday in a row with a Swords card. Okay. 8 of Swords warns us that we're going to feel trapped and lacking solutions. Perhaps we're chopping around or nearly achieved our goal only to slip further away than before. This card usually negative, which fits Thursday's reading. If you trade here, you'll probably be in agony at some point. The good news is the energy should subside by the end of the day and maybe bring small reversion trade. Still walking out of this trap instead of jumping in. I don't like the setup just yet. Okay, that's fine. Look at this rally though. I'm just gonna say, whoa, what a crazy move. You know, who's not moving right now is the Qs, not nearly as good. So that said, recap is this is going to be a tough week for stocks as we have a few days of weakness, a few warnings, a few pivots. I don't see anything outright bearish here, but I do see many reasons to play light, if at all. Is it an OPEX week? I don't know. If it's an OPEX week, OPEX, I don't even take into account personally, but if it is, you guys let me know. Those are all signs. Those are always a nightmare to trade. Yeah, not for us. But thank you, Miss Cleo. Always happy. Always appreciate the insight. All right, so this is my view really quick. So from this last breakout, so we had, if you guys know how I trade, we use these things called NFP levels, right? Once we had this open, this was Wednesday, right? And we opened above that prior Friday NFP high. We had a little chop. And if you're in our group, you knew when we said this, even this little dip, I was like, assume we're going to break out and hold this little day, this little blip right here. We opened above. We opened exactly above, pulled back just slightly. That was it. That was your last shot. That's it. As long as we're over this 496, we are in an uptrend, my friends. That is how that works. We are good to go. Today's average week from an average week's range from today's open would actually bring us to 512 on the week. Can you believe that? 512. So this is an aside, like maybe this whole move gets you to 510, 512, and then it pulls back at that point, right? Only to bring you back to where you stopped at 500. And if you wanted to short here at 500, well, you'd be screwed, right? So yeah, I get it, right? I see all this tippy top, whatever, upside of the channel. This is what they're talking about. Essentially breaking out. But look, as long as we're continuing this trend to the upside, I'm going to stick with it, right? It's not going to be until you're coming back down into the bottom end of this channel, just as a side, right? And if you're really looking longer channel since October lows, yeah, we're actually crystal clear. And I wouldn't be thinking short really unless we're in the bottom half of this channel. But for now, look at this average week's range actually just brings you, this is a 1x2 standard deviation channel, brings you to the very top of that channel. So no, not worried about it. Not even a little bit. That's, geez, look at this. Look at this. Not worried. Average week's range to the downside from the open here would be 490. So the way this works is if we ever lose 495 on SPY itself, we should see immediately pretty much down to 489. And that's how that's going to be. It's just going to be probably a quick flusher, but anything in this dip area, very likely an ad zone. Honestly, if you see a possible test around 496, that's likely going to be support in a big way, just as an aside. So if you get a shot that does take you somewhere around that 496 level and you start basing there, expect it to bounce right there. I don't think that we'll get the shot again, just saying. But if you do, that's going to be a huge level right there. Anything below 488, we should see quickly 480 at some point in the future. We should actually break below that 480 and get to 470, but that's so far below. Until we're below 489 on SPY, we are not in a downtrend. That's what's true, right? And as long as we're above 496 on SPY, we are firmly in an uptrend. If we are in between 496 and 489, you can expect sideways action, but don't expect a big breakdown or a breakout. That's how this is going to work. So anyways, that's the Qs. Or sorry, that's SPY. Qs is very similar. Yeah, here was the level right here. Same kind of thing. We broke it and never looked back. Average weekly range. We still have room. We're barely moving. If this goes, this has got a lot of room. Breakdown on this guy. Honestly, a breakdown on this guy would just look like a retest to that 430 level and probably chop, but I don't it's going to be CPI, PPI, but with earnings the way they are, it's going to be really hard to break this market. This, I think, could probably chop to the ups, like chop around for a little bit. But if it does break out from today's lows, to the highs, would be an average week's range would legitimately take you to about 450, believe it or not. Wild. Can't believe I'm saying that. Do you guys remember trading the Qs and they were like $200? Wasn't even that long ago, was it? Diamonds, very similar, right? So today, this was that Feb NFP high. Diamonds, so diamonds a little different. So diamonds have not had their day in the sun where what we're looking for on these type of levels, we're looking for open above and close above. We don't have an open above and close above yet. Do you see this? Like open below, close at, open above, close below, open below, looking like closing above. Tomorrow, open above. If we get a retest, close above, then you're off and running, and have an average week's range on diamonds or YM 395 on this guy. 400 on DIA is going to be a big deal. Psych level. IWM, very similar, right? So we had a little bit of a dip buy down in here, but the second that we reclaim 192, we knew, okay, we were off and we should be off to the races. And the second that we were closing over 195, open above, close above here, we're off, right? And this one, as different than all the rest, this weekly, I'm just going to hide all of these drawings. Weekly chart. Look at this. Higher high, higher low, looking for a higher high realistically. So that will confirm over 206 on a weekly setup, a completely new bearish to bullish reversal on a weekly time frame. And that's going to be a big deal across the board. So that's why you might see some of these 500%ers popping off across the board. You might see a lot of people talking about stocks that you haven't heard of for a long time or haven't hit the wire in a while, like an Okta or, Fastly, or I'm going to even go there and say it, like a Blink or something like that, right? So just saying. So that's the indices right now. So I'm just going to do a quick check on the dollar. So dollar, we know typically when you crack a 200-day simple moving average, which we did here, it's usually not the first breakthrough that holds. And it typically comes back down and retests at some point. So we're coming back down. Ideally, this is the dollar, right? So SMA is probably not that important, just to be fair. It's very macro driven. And this pullback is to me all about hashtag teacher, hilarious. To me, all about tomorrow's CPI. So this can reverse course based on tomorrow. That's why that GDX trade is very much all about tomorrow as well, right? So GDX here, this was where we are. I'm just going to take this channel down essentially. So this was our prior channel. So we bounced off the midline here, off the actual channel. This guy, if I take these two, so tag that, bottom, kind of based out right here. We're holding above. Hopefully we're good to go. I'm not counting my chickens just yet. It's going to close over my stop. So we're going to be fine. I'm going to have my hedges off. And hopefully this is like that liquidity grab, but it's not a giant position. And I still want to be very cautious about it. So that's that. I did add to it just slightly, but that's where we are. Cool. 10-year. Also, TNX, this is the yield of the 10-year. Very cautious. We want to watch this as well. So we don't want to see this over 420 on TNX. That's going to be kind of like your trouble zone. So we've been knocking up to the top of that range. Dollars kind of been knocking up at resistance. Watching these things pull back today, that's good. That's why we're seeing a lot of this movement to the upside today across the board. And man, oh man, are we doing this, right? So these green lines on my charts, these are average daily ranges. Clearly, you can see who's the strongest of them all. Like IWM hit it first. Now Diamond's coming to catch it up. SPY is clearly third out of the top four. And then Qs are way down at the bottom here, holding up the rear, right? So this is part of that kind of rotation that you're starting to see, right? So if it is all about the rates, right? If it's all about the rates, it's going to be IWM. GDP is good, growth is good. That's your diamond sector. These two things will rise this guy slowly. There's not a lot of stuff from here that's going to the Q, so these are going to lag just slightly. All right. So that said, let's go ahead and hop into a couple trades. Someone asked, and so when I do this, what I'm going to do is I'm going to go on a multi-time frame view, and I use 4 time frames at least, right? And so this is, to me, this is how it works. So I have a weekly down here. I have a daily down here in the middle. I'm going to use hourly, and then I'm going to do a long view on a 30-minute chart, right? And so somebody asked about AMD. Where do I think it's going to go? Look, so this is where we are on AMD. This is a very, very big deal. So I had AMD entries earlier, right? And I'm looking at this really right now of like, what are we doing as we speak on AMD? Kind of like breaking out here. I'm just going to sync this in the layout, these two lines. Oops, that's probably fine. And then I'm going to drill down. So weekly, still up. We're post earnings, right? So post earnings, we've got more than our 3-day grace period. We're about to, looks like, squeeze maybe up to the upside on the daily. On an hourly time frame, we have just now, looks like, let me go ahead and change this to a different one. A little bit more clear. We just now kind of tagged the top, broke out of that top wedge here. This is what I'm looking at. And we are out, just barely out. Like, so we're just peeking out. So this could be, that's why today is like a trim. So I wanted to trim up here. Now we could probably pull back a little bit. Did I get my execution? No, I did not. Let's see. Still way up there. Daily range on AMD actually brought us, I was looking for this 178-ish level right here. So I'm looking to fill in the short term, this kind of fair value or this kind of area here that we broke down from on last Monday. So as long as we can continue this uptrend here, for now, I should be looking at this being essentially support. And this trend will stay intact, really, as long as we close over Friday's high of 175. That makes sense. If you want to, if you want to look at like different, where do I see it going? I mean, here, we're just looking very basic. Right now, we're just kind of, if we can crack this, then we're looking at just slightly over 189 by the end of the week is if we really, really break out. That's why I have the strike that I have. If you know the strike that I have, that is why. Hopefully that makes sense. But also why here, I want to trim in strength. We'll see tomorrow. And this is a chunky one, right? So chunky, like AMD gets real chunky. Sorry, just trying to get this, tag the top. So if I just do base extension, this is like 200. That's of that. That's Feb 20th. Yeah, I'm not looking that far. We're just looking to pop out over this channel, kind of to the top, right? So we're looking here first, 178, and then looking for that 181 plus, and then runners from there. Cool. All right. So let's see, Octa. So Octa, okay. So I do have a chart on Octa. So Octa is a crazy chart. We are like right in the spot for a pre-earnings run, essentially. So February 28th is it's the very end of the month. That's when Okta reports. If you look at this, let's see, like range, essentially. So Okta, 641 days, it's been in this exact range right here, right? And it was just starting to break out this morning. Well, it's been kind of starting to break out. So 87.50 is like the real, like, oh my goodness, we can start to really move. I'm gonna move this up. 87.80. We're not holding that level right now. I think if we get holding over this level, like a couple days trending, that's actually going to be really good. This might not be until actual earnings. So if you're not familiar with Okta, they do something called MFA, multi-factor authentication. In like the information security kind of like group of like technologies, you need multiple layers of security, right? From an enterprise perspective, right? You need something called a firewall. That's your Palo Alto Networks. Also like a Fortinet. In addition to a firewall, you need endpoint protection, both like on the enterprise, like data center side, and the endpoint side, which is like laptops and stuff. That's CrowdStrike. So they're not competitive. They're complementary. So you need both CrowdStrike and you need Palo Alto. And to access all of those applications that you're running as a business, you use something called Okta, right? Which basically is your single sign-on. If you've ever heard that term, SSO. MFA, when you think of like your multi-factor authentication, OKTA is what enterprises use for that functionality. So anyways, yeah, they've had a couple headlines in terms of like key leaks, the like data leaks, essentially, like, but that doesn't have anything to do with their actual technology, to be fair. Unfortunately for them, it's like actual people being dumb. So like if you hold your security, like if you held your password somewhere that you shouldn't have, and your password was like, if you wrote your password down on a piece of paper and you left that piece of paper out at the restaurant and somebody picked it up and they used your password, that's basically what happened. It's not the technology's fault. It's like some dummy's fault. That is what it is, right? So that's anyways, that's my 2 cents. I'm going to get off the high horse. It's still a good tech. The only thing I would say is about this tech, it's not like this huge addressable market, right? So is it worth it here? Yeah, I think so. Can the market get like really juiced up about it because it is like super high growth? Yeah, for sure. Is it worth $300? Maybe not, right? That's why I didn't really show my group like, hey, look, yeah, we are talking, if you do get some crazy bounce, this like just base retracement would bring you to like 165 on a 50% retrace. But that's not what I'm looking at right now. What I'm looking at is just taking this real like mid extension. So of this consolidation really, and taking an extension to about like 102, maybe 110 to the upside, right? That's what I'm looking for. And that might end up playing post earnings, but we'll see. We shall see. Okay. Can't beat this 15. Looks like RNLX. Looks like Holo from 50. Yeah, I have no idea what that is. What's up, Motion? Snow. Okay, so So I can't, there's no we, right? So let's be fair, right? I don't tell anybody what to do. I just tell you guys what I'm doing. So just, we got to keep it legit here. So where I am on snow is that when snow held over 225, there was a session gap right here. Whenever you fill a session gap, that's a big deal. You fill and you close above. It's a very big deal. I think, on the last swing, you could obviously trim, like it's up good amount. It's Monday. We don't know that volatility holds over the week. So this is as expensive as options will get. There is the next gap on snow is all the way up here. That said, look at this. It's all the way up here. That said, this is an earnings gap, right? So this is from one of those classic beat and skeet, classic beat 330%. So that earnings gap takes you to 264. That's why I have the strike that I have on the roll up. The lower strike of the 250, I do like the best. Snowflake reports earnings. Snowflake reports earnings. Let me pull this up. The week after my expiration, Feb 28th. I do not have Feb 28th expiration. That's for a very explicit reason. You guys know how I roll with that. So here's that gap. Sorry, it's taking so long to get it over, but this is basically the deal. Yeah. Goodness. So this is where we are. Kind of just want to have, your levels here. As long as we're holding, level to level, if it's a daily candle to candle, you can pull back. Here's your current volume shelf here. Hopefully you've trimmed a little bit. As long as you're holding over this, you should be continuing trend. The session gap is all the way up here for the next one. And as long as we're over 225, we should chop to fill that upside gap. The concern and caution is that we did on this gap up, when we did fill, we created another little gap down here. So this is one where snow has been tricky to trade, no question, right? Very tricky. If you see it kind of breaking down, you can kind of exit short-term options and re-enter something around here. And definitely if she holds that session gap at 225. But for now, look, that's the upside. That's the upside target in the short term before earnings. I know it sounds like it's really far away, but look at these moves that she's been doing, right? And again, this is a 2-year base. You guys know the term. The longer the base. Yeah. That's why we're getting what we're getting, right? 643 days, right? 643 days. If I just went from a standard extension perspective of this base, let's go here to here, right? This is actually going to line me up pretty much exactly here. And I'm just taking just rough from this 137 to 185 kind of box. 50%, 150% extension of that brings me to 260. We are currently at a 100% extension now. So can it stall? Yeah, it can. But if it stalls and base is up here, that's good, right? Obviously, any dip buys around 200 if Datadog does do something. But the reason I have what I have is because of Datadog. Though, like tomorrow, right? It is tomorrow after the close. It's going to move Snowflake. There is no question in my mind that, or tomorrow before the open, Snowflake will be moving in the after hour or in the pre-market tomorrow, regardless of what happens today. And that's going to be because of Datadog earnings. Good, bad, or indifferent, it's going to move. It's going to move a lot, and it's going to be because of Datadog. Cool. Run. Yeah, we can take a look at Run. So couple of guys for our group. Yeah, I think Run, you could start trimming, man. this was a nice little earnings trade, but like probably really pristine setup here. We took this in the private group. Looking at a 618 kind of retrace right here, 1750 from about 1550. That's a nice little trade, just like 2 days. What is that? 10% on equity alone. Options are good. You still got runners. But yeah, I'm trimmed most of that. I'm all runners. Oh, Meta. All right. Winston's wants Meta. So I don't know if you're Winston. I don't know if you're in the server or not. You're probably not if you're asking. If you're asking about Meta, that means you're probably not on private groups. But we've gone over this extensively, right? And I'm not touching Meta, and it's for a very good reason, right? It's not ready. It's not gonna be ready. It's not gonna be ready until it's over 486 or below 445. This is what we call like. Did you? All right, you guys gonna slow down. I'm gonna close this off pretty soon. What we have here is what we call power earnings gap, right? So peg, whatever. That's fine, right? But whenever this happens, you need to expect that the market will take some serious time to digest this move, right? So the saying is the markets are either running or they're resting. This is a big run, right? It's time for a big rest. So right now we're sitting at 10 days. I would expect at least 2 weeks on this, right? I'm just going to show you a couple examples. So NVIDIA, when you have a power earnings type of gap, right? We got to scroll back for another one. So this is a big stick, right? NVIDIA, power earnings gap. How long does it take to move, right? This is 18 days. And it didn't move. And we go like this. Simple, right? Here are your 2 levels. It's this one right here. You don't have an open and close above like either of these. You have an open, above, close below, open, above, close below, open, above, close above, boom, right? It's not until 19, about 20 days after that earnings report that the market took to digest this. In these 20 days, all the IV on all your options are getting just chopped away. So let that stew for a bit. You're looking for a daily open above and close above, or daily open below and close below. Just more of the same to show you what that looks like. I'm not just making this stuff up. Ulta, right? Power earnings gap, boom, right? Then we do the same thing, right? You'll trade right into this. Here's your thing. But you might get one kind of push up, but this is a 50-day consolidation right here, maybe more than. I'll do another one that we have live. So Disney, big power earnings gap up. I actually rolled up on some trades yesterday, but here's the deal, right? So the entry Friday was off of this level here, and I was just looking for this kind of move, possibly today. I know that if Disney's not really closing at least above 110 today, it's going into like another 15-day plus consolidation. So I'm already trimming most of my Disney here, a lot of my Disney, and I'm fully prepared to like close entirely and put this on a big wait list until we're breaking range, which might be multiple weeks out, right? And so expect this, understand this, right? Markets are running or they're resting. And earnings are no different. And the bigger the earnings move, the more important that concept becomes, because it takes a very long time for the market to digest those kind of moves. We just missed a 6 short on it. Yeah, maybe. Yeah, so that's why I was saying today looks like a day trading setup, front run into CPI, right? Yeah. Oh, that was a big rejection. Front run into CPI. Look, and then tomorrow we'll tell. After tomorrow's open, then we get a really good read on the week, right? But this stuff today, this is a lot of the market front running what they're looking at possibly for tomorrow. So CPI is going to be all important for sure. All importante. Cool. Very cool. Yeah, holy sell-off. That's what happens, man. These what happens. All right, guys. Guess who's not selling off like crazy? There's a story here. There should be. It's right here. It's right here. Right? Who is tired? These are called exhaustion gaps, exhaustion candles. We call them kill candles sometimes. But side note, you might want to go long. Because that was a big one. Anyways, who knows? I think we'll see a lot of this chop, 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 chop. Don't take that. I'm not watching the market. I'm not trading. But yeah, we can see reversal just pop like that on an exhaustion type of move. Anyways, could you give a quick rundown of changes coming over server 3.1? Yeah, so like I said, so what we're gonna do internally, we're gonna go ahead and start off a new semester of School of Gains on 3.1. That means that if you're not a member now or before the 29th of February, we will not be accepting you, right? So we want everyone to start at the same time so that we can all be on the same page. We're going to have like actual handouts, things like that. There's like assessments, etc. We'll give you guys legit trade logs, stuff that we'll track as a group. I was thinking about running a small account challenge. We'll see. But the actual longer term stuff so might actually take a little bit longer than that. So there's going to be a revamp of some of the other educational things. There'll be new educational pieces that you're getting from like a fundamental perspective and just the whole like progression from starting you as a day trader into basic swing trading into then advanced option strategies into spreads and then finally closing everybody out with a full season of our earnings, like our implied volatility, like system for trading earnings. So the idea is once every 3 months to be able to give you guys the full package, take you from really knowing nothing about trading or maybe even options by the end of it, being able to basically do everything that I do. Everybody's not going to be able to pick everything up in one go, but you'll have the tools to be able to do that. But that said, like there's nothing else out there that's even similar to what we do. There are many servers or groups that try to do what we do, but like there's nobody that has nearly like the extensive library of education that we have or like materials that we have, or I've gone even halfway into the depth that we have for really almost any of it. So that said, that's really what it's going to be a little bit more in depth. So handouts, things like that you don't have today. A lot of stuff that we've done so far in the training is like kind of like topics that I know that I'm familiar with, but we don't have like fully formatted slides and clean up everything from the presentations previously. So pretty much every week's going to be really like a full-blown class like you would have in school. So that's what we have coming in the near term. But all right, guys, that's it for now. Hopefully that helps, and we will be off to the next one. Adios. I love you all, and I will see you out there. See you later. Peace.